Okay, so now I'm recording. Um, I'm very happy that you are coming here this morning for this review session. And like I mentioned in the email, I'm going to go through the additional learning or study materials for exam 2. Because like I mentioned in my prior video that module 2, excuse me, module 2 is very challenging. We have a lot of like formulas and things like that, and this is the core of managerial accounting, and I want to make sure that you fully understand everything before our exam 2. And this review session is more likely to be like I will raise some questions, and then you will think with me, and then try to think of the questions, and then we can go through that. And I, in the meantime, you probably will figure out, well, if you have a good knowledge of some topics, well, probably not as good in some other topics, and then you can go back and study. Um, so let me pull out the file, the study guide. If you have this file, you can also open that by yourself or take notes or something, whatever works for you. So our exam 2 is going to cover 4 chapters, 3, 4, 6, and 7. And then I will not, go through all these study materials, but I might highlight some of the questions, and then you can, some of the materials that is the most important, and you can go over that. We can talk about it. So this review session is planned to be about 1 hour, and if you have like more questions, we can do that 1 hour and a half. Since I have a meeting at 11, we can, do any time before 11. Okay, so chapter 3 is about, so the main topic is job costing, if you remember that, okay? And then the first topic we talk about is the difference between process costing and the job costing. And then when do we use process costing, and when do we need use job costing? Okay, so my first question is, you can unmute yourself, or you raise your hand, or just maybe you can just unmute yourself, because I don't want to I don't care who answered the question. I just want you to think about that questions and answer the question. You can unmute yourself if you know the answer. So my first question is, when do we use process costing, and when do we use job costing? Do you remember the circumstances that we use job costing? Anyone?
Memory serves, process costing is for when you're doing a lot of the same process, job for unique different.
Yep. So process costing is you do like mass production, the same products, no like, not very customized, right? But for job costing is unique and customized production, such as airplane, cars, and construction buildings, something like that. And then basically what we do in chapter 3 is to figure out how to do job costing, because process costing is very, very easy to figure out. You just figure out the total cost and divide it by the number of units that produce, and then you get a unit cost, okay? Okay, so second is a flow of cost in manufacturing firms. This is very important, okay? So in my in-person class, I would draw this on the board a lot of times. So you have raw material, direct labor, and then MOH. And these are the product costs that we did in chapter 2. And then raw material is inventory account, inventory item, and raw material go to work in progress. Work in progress is the, what is that? It's the not finished products, but it's not raw material, okay? And then after a work in progress, you will have some complete product, okay? The production has been completed, but not yet sold. So raw material, work in progress, and finished goods are the three three different kinds of inventory for manufacturing firms, okay? And then once you sell your product, your finished goods inventory will go to cost of goods sold, which is, so do you know where, which statement these items are on? Anyone? So raw material, work in progress, and the finished goods, like I said, are inventory accounts. So where is inventory? Inventory is on the balance sheet, right? So this raw material, work in progress, and finished goods are under inventory on the balance sheet, while cost of goods sold is on income statement, right? So, excuse me. So this is the flow of cost. It starts from inventory and then eventually it goes to income statement, okay? So this is the flow of cost in the manufacturing firm that you need to keep in mind. You know, it's probably will be tested in the exam. I haven't looked at a test yet, but it's important. Determining cost of a job, and then actually the most important thing in chapter 3, job costing, is to figure out how to do a manufacturing overhead. So basically there are 3 different kinds of product costs: direct material, direct labor, and manufacturing overhead. Direct material, direct labor are very easy to recognize. You just do you know, how much of the material you use, and then the direct labor hours and their hourly rate, and then you know direct labor. But MOH, we do an allocation, okay? Can anyone tell me how to do the allocation with MOH? You know, start from the beginning. What do we do first, and then what do we do later? Anyone? Are you looking? Yeah, you can probably open up the class note for chapter 3 in the meantime, just to look back and forth and to help you remind you about this material. Last call, anyone? Okay, I'll do that. So to determine to determine manufacturing overhead in chapter 3, we do an allocation instead of doing a real, like if you pay utility bill this month, we recognize MOH. No, we don't do that. We do an allocation, and then this allocation is based on a predetermined overhead rate, which is determined at the beginning of the period based on our estimation of total MOH during the period and our estimation of the total allocation base, okay? If you still remember, I told you a lot of times about this, you know, when you do predetermined overhead rate, you need to estimate it, you know, total overhead divided by estimated allocation base. And I think you have done that for project 1. I think you've done very good job on project 1, and you should probably have a good knowledge of that. And then once you have the predetermined overhead rate, you allocate your MOH using the predetermined overhead rate times your actual allocation base, okay? Like actual direct labor hours that happen during the period to allocate your manufacturing overhead. And then after that, you're gonna have a difference maybe, and it happens usually all the time, that there will be a difference between your allocated MOH and your actual MOH. And then if you could remember, what do we do if we are over allocating? What does it mean by saying over allocating? Anyone? You're so quiet. Are you here?
What was the question?
The question is, what does it mean by saying allocating? And then what do we do if we are over, I'm sorry, what does it mean by saying over allocating? And what do we do if we are over allocating?
Over allocating will be your allocation based over allowed for MOH on a particular job or process, and in order to correct, you subtract it from cost of goods.
Okay. Excuse me. So when we say over allocating or under allocated, we basically compare our allocated MOH to the actual, right? And if our allocated MOH is greater than what actually happened, then we are over allocating. That means we are counting too much production cost to our finished goods, and then we're gonna decrease our cost goods sold to just balance out the excess amount of cost. Okay. Okay. Let's do some questions. So now I'm gonna open up the two simple questions. Okay. Can you see my sample questions now?
Yep.
Okay, thank you. So the question, so we are looking at chapter 3, and the question 4 and 5 are actually doing an allocation of manufacturing overhead for a year. Do you guys want me to go through this problem, or you're good with you know how to do that? So it's very straightforward. So question 4 is how to do overhead read, and question 5 is how to do an allocation. Just tell me, do you want me to go through this question?
Can you go through it really quick?
Okay.
Just,
Okay.
thank
Okay.
you.
So question 4 is predetermined overhead read, and if you okay, let's do it. Predetermined overhead read will be equal to. So remember the two words that I said very loud every time that you need to remember the two words estimated, right? So estimated MOH divided by estimated allocation base. Okay, remember that? Okay, so now tell me, what is estimated overhead? You can actually type in the answer if it would be easier for you, just to chat.
It's 160,000, right?
Correct. Estimated manufacturing overhead will be 160. Thank you. And allocation base. Allocation base is a cost driver, and usually is direct labor hours, machine hours, right? And then this is 12,000 direct labor hours would be worked. Do you think this is estimated or actual?
Estimated.
Yeah, it is estimated. It's saying that estimated manufacturing overhead will be this amount and this amount. And then after that, you can get the predetermined overhead rate. Anyone can help me very quickly?
A.
A, okay. So 13 point, okay. I'll just don't mess it up and choose A, okay. And then the second question, how to allocate the overhead rate for the year based on direct labor hours. So MOH, I would just say actual, okay. Allocated MOH. Allocated MOH, how to calculate allocated MOH? Predetermined overhead rate times what? Anyone knows?
Actual allocation.
Okay, actual. Thank you. Thank you. Actual allocation base. This is what really happened, right? So predetermined overhead rate is just an estimate, and then we do an actual. So it's 13.3 times, what is the actual allocation base? Is here, right? It's 15,000. Okay. So anybody can help me? What is the answer?
200,000.
Okay, so this is the, okay. We're good? Okay. Good, let's look at, let me see.
Excuse me, Professor.
Yeah?
Is this recorded so I can go through it again? Because
Yes, it is recording. I'm
okay.
recording it, yeah.
Okay, so I can go through it later, right?
Yes, and
Okay.
yes, and do you know this file is posted as well as the answers to all these questions?
Okay.
Okay, it's all on syllabus. Okay,
Okay. Thank you.
you're welcome. Okay. So let's do work on question 13 very quickly, okay? You can read this question in, actually, I just asked this question, but let's look at it in a question format. So it says over allocating, right? So what do we do? And most of the jobs produced have been sold. We should decrease cost of goods sold, right? Okay. 14, similar. The record, the entry, journal entry for all these accounts, I think, let me see. We probably don't have a lot of time to go over all of those in this review session, but you can check it out in our class note, and also look at my video recorded for chapter 3. So all these journal entries, okay? What do we do when we purchase new material, and then what do we do when we record all these costs to be used. And especially what is tricky is you must pay very, very close attention to how to record this manufacturing overhead, okay? And when is a allocated or actual? Do you, I don't want to, like I said, I went over this in the chapter 3 video. I don't want to go over it again. Do you have any specific questions about these journal entries? Okay, so and then you must the easiest way to remember that is to try to remember the manufacturing overhead T accounts, okay? And then the debit side is the actual when it happened, and then the credit side is the allocated, okay? So so I have a question here. What if the manufacturing overhead account has a debit balance? What does that mean? So what if we have a debit balance here?
Does that mean it's underallocated?
What is that again?
I said, does that mean it's underallocated?
Yes, correct. So that means our actual is greater than allocated, right? Or say we allocated is less than actual. That means we are under allocating, correct? Okay. I think that's pretty much it for chapter 3. Let me make sure. Any other questions on chapter 3? You can always go back to the video and then, okay. You can always go back to the video and redo these problems. Okay. Again, module 2 requires a lot of calculations, you know, things like that. So I would recommend that you take out your pencil, just work on these problems as much as you can. Then you will be good for the exams. Otherwise, if you look at it and see, well, I get it, but then when you look at the question, you might just choose the wrong number and then you got it wrong, okay? Okay, chapter 4. Chapter 4 is activity-based costing. It's pretty easy chapter. I think I recorded for the chapter for only like 13 minutes. So for chapter 4, you need to understand that we have some of the firms has different kind of activities, and the different activities will have different cost driver. And sometimes if we use activity-based costing where you use different overhead rate, you're gonna record a more accurate cost for your products. So we have been through, you know, gone through all these examples for chapter 4. And if you understand how to do allocation of MOH in chapter 3, you should be good to calculate the MOH activity based for chapter 4. I don't think I want to say a lot about chapter 4. Do you have any specific questions here? No? Okay. So please, you know, it's only like about 10-13 minutes. Go over that video and then see if you have any questions and reach out to me on chapter 4, okay? Chapter 6 and 7 are the most complicated and most important chapters in managerial accounting. Again, it needs a lot of pencil and paper, you know, to work on the calculations or something. So chapter 6 is cost activities, and then we need to understand how to do our cost function. So my first question about chapter 6 is, do you know when we talk about cost function, what does cost function look like? What does cost function look like? Do you remember? You probably know that, but you probably don't know, you know, that is a cost function. A cost function is like this. Y equals to V times X plus what? F, right? So Y is our total cost. V is what? We just did project 2. Don't even know. Variable cost, yes, correct. What is X?
The number of units.
Correct, thank you. And what is F?
Fixed cost.
Correct, thank you. So this is our cost function, and then it says it's a function. It's very similar to what you learn in middle school, Y equals to A times X plus B. The most important thing is to figure out what is V and what is F, okay? So these two variables, or these two coefficients, are basically what we are doing in chapter 6, okay? And then first, you know, chapter 6 introduce what is variable cost and what is fixed cost, okay? So since we have done project 2, my question, okay, so listen to my question very very carefully. So which cost does not change no matter how many units that you produce? Variable or fixed?
Total fixed.
Yes, correct. So our fixed cost stay constant. So that's why it's an intercept, right? It's a constant. Okay, so next question. Which cost per unit will stay constant? Which kind of cost per unit will stay constant?
Variable.
Variable cost. And then this is another coefficient that we need to figure out. I think in your project 2 it's 0.14, right? It's 0.14 is the variable cost that one more product you will cost it will cost you 14 cents to produce. Okay, next question. Which cost will increase as your total number of units will increase?
Variable.
Correct. And then is that proportionally? Is it proportionally?
Yes.
Yes, correct. And then actually in chapter 6, we also bring in another idea of a mixed cost. A mixed cost means, there's a combination of variable cost and fixed cost. So my question is, does mixed cost increase as your total number of unit increases? You want me to repeat the question? Will mixed costs increase as your total number of unit increase?
Yes.
Yes. Is that proportionally?
No.
No. Correct. Very good. So now you understand. A mixed cost will have both a variable function and a fixed function. Okay. And then the total the mixed cost will increase as your total number of units increase. Is because you have the variable portion of that. Okay. So cost function, we have talked about it. Okay, question 2. Let's look at a little bit of question 2. Question 2. So you are looking at my sample questions, correct?
Yep.
Yes.
Okay. Okay, before we go to question 2, I'm gonna write down this formula again. So you must be very, very familiar with how to derive this function from, one to another. In other words, if you know some of these numbers, you must be able to squeeze out the rest of that. Let's do a very simple example here. So question 2. Question 2 is to determine operating income if sales are oh no, I'm sorry, this is not. Let's look at question 3. Question 2 a little bit more complicated. Let's look at question 3. So your call offers a calling plan, charges $2 per month plus 5 cents per minute call time. Under this plan, what is your monthly cost if you talk for a total of 100 minutes? Could you please do that now and tell me what is your answer? Or like maybe we can write down the cost function together. Okay, so y equals to v times x plus f, and then what is our v? What is the v?
0.05.
5 cents, right? Okay, times x, and then what is our f? Fixed cost? $2, correct. And then 0.05. What is our x?
100.
100, yes. And what is our fixed cost? $2, right? And then tell me the answer. 7, yes. Any questions?
What about the one on top, the one above it? Is it the same way or?
Um, yes, but it's a little bit. Yeah, we can work on that as well. It's not about the cost function, so that I skip that, but I can work on that. Okay. So this question is determine your operating income. So I don't know if why this question is here. Actually, it's later. Can we go back to this later after we talk about the contribution approach income statement? It would be easier.
Yeah, sure.
Okay. Yeah. Okay. Yeah, I like this question, and we can go back later. Okay. So now, are you looking at my study guide again?
Yes.
Okay. So so sometimes, like I mentioned in the my chapter 6 video, sometimes we do not know our V or F, and we only know Y and X. Okay, we know that how many miles we drive, and then we know how much cost we spend on the delivery van. So sometimes we need to figure out what is V and F, and then there are different ways to do that. The first method is very easy, but it has some limitation. It's called a high-low method. Do you remember we did on chapter project 2? I think if you were able to do that in project 2, you'll be able to figure it out. Other than that, you can look at my video, and this is very important. Okay, you must know how to do a high-low method. Actually, we cover some other methods, but basically these will need more technique, and honestly these other methods are not easy to test in an exam, but high-low method is easy to test in an exam. So I'm not saying that this is going to be an exam, the others are not, but I'm just saying that this is important, and you must understand that. Okay. And contribution margin, income statement, and functional income statement. So we bring in another kind of income statement. It's called contribution margin. You have done that in project 2. So on top of project 2, you have the traditional, which we call a functional income statement, and then later you were told to do a contribution approach income statement, where you differentiate our costs, product cost and period cost, into variable cost and fixed cost, and then sales. When we deduct variable costs from sales, we get our contribution margin, and then when we deduct fixed costs from that, we have our operating income. And these are our new approach of income statement. You should be able to. I think you are familiar with that. And contribution margin will be equal to sales minus variable cost. Let me see. Yeah, let's work on some of the questions in chapter 6. I think it would be helpful for you to learn this material. You're looking at my questions, right?
Yeah.
Okay, good. So now let's look at question 2. I've give you maybe 30 minutes or 1 minute, 30 seconds to 1 minute to look at this question and tell me if you have a clue. Oh, I'm trying to, okay, copy the formula here, but I messed up. Okay. Let's see. Yeah, we can work it here. So contribution, approach, income statement. We start from sales minus variable cost, and then we have contribution margin, and then we minus fixed cost, we have operating income. Okay. So this is the way that we reach our operating income. Okay. We can. I think you should be able to, just write what I just wrote. Be able to do this contribution approach income statement very easily. And then you'll be. I think there will be an Excel file to do the exam. So during the exam, maybe you can, when you meet a question like this, you can just write, just structure this income statement in the Excel file. And then after you have any questions related to this, you just plug in the numbers, just in case you make mistakes. Okay. So sales, what is sales in this problem? We don't have total sales, right? But we have sales per unit, which is $60. And then we know how many units we sold. It's 6,000, right? So our total sales is $360,000, right? What is a variable cost? Variable costs are 45% of selling price. So 45% of our selling price, which is 60, is our variable cost per unit, right? And what is our total unit? Our total unit is 6,000, right? And then our total variable cost is, anybody help me? $162,000. And then you can calculate your contribution margin, which is 198,000. And then you need to deduct your fixed cost. What is our fixed cost? It says it's 80,000. Okay. Okay, so now tell me, what is operating income?
$118.
Yes, correct. So the answer is B. Okay. Are we good? Okay, so now I'm gonna ask a question. And then if anyone can answer that question correctly, I will give 1 bonus point in the exam, okay? The question is, can you tell me the contribution margin ratio for this? You can do, you can send me chat. Because in that case, more than one person can answer that question. What is contribution margin ratio? Yeah, correct. Correct. Yep, you got it. How many people are here? 1, 2, 3, 4, 5, 6, 7. Yeah. I'll give you each a bonus point for that. Very good job. Okay. Let me see. Okay, let's look at some other questions since we have time, and then variable cost. Okay, so let's look at question 5. So this is another example regarding how to figure out our cost function. Like I said, if you know some of the numbers, how do you reach out the rest of that? Give me 1 sec, please. By the way, if you are not attending this review session and you are not seeing the chat transcript, contribution margin ratio for this question is 55%. Okay, so which question I said it was 5? Yeah, 5. Okay, I'll give you 1 minute and see if you can figure it out. Okay, y equals to b times x plus f. If anyone has the answer already, please send me a private chat message. Yeah, somebody got it. Correct. Mm-hmm. Anybody who is working on it and need more time, please raise your hand. Okay, sure. Mm-hmm. Yep. Let me see. 1, 2, 3, 4, 5, 6. Okay. Anyone need more time? You can text me in chat. All right, let's work on it together. So first, like I said in the prior question, you should write down the contribution approach income statement out to figure out the problem. For this kind of problem, the first thing I think you need to do is to write out this cost function, just including all these variables. Okay. So first, and then you can plug in all these numbers. So first, total cost, we know that it's $350,000, okay? And the variable cost per unit, we find we don't have a V, but it doesn't matter. You just write down V and then just write out whatever you have, okay? And then what is X? The units are 100,000, right? And then do you have F? Yes. Total fixed cost is 150. And then now, actually, it goes back to our middle school, function solving problem. And then you can solve V will be equal to 350,000 minus 150,000 divided by 100,000, okay? And then our V is 2.5, okay? And once you have V, you actually already have this cost function, right? Because your V is 2.5 and you have your F, which is 150,000, okay? And now this question actually comes back to the same as question 3, right? Question 3 is we have this cost function and then we just plug in our X, okay? We just plug in our number of units. So this question comes to be Y will be equal to 2.5 times our new unit, which is 200,000, plus our fixed cost, which is 150,000, okay? So the answer is, did anything wrong? Oh, I'm sorry, it's 2. Hey, anybody who figured it out, did I do anything wrong?
It's just asking for the variable cost.
Oh, okay. Thank you. Okay, so V times X, thank you, will be equal to this, and then that's 400,000. Okay, thank you. Okay, any questions on this? Do you want to do more questions? You can answer it on chat. Otherwise, we can go to chapter 7. Okay, I'm gonna have a vote. Do you want to do question 8 before we move on to chapter 7? 8 is high-low method. If you are confident that you know how to do that, you have done that in project 2, then we can skip that and go to chapter 7.
I have like a quick question on high-low method again. What do you like do first? Is it based on like highest number of units or highest cost? I forget.
You should do highest number of units.
Okay, thank you.
Yeah. Anything else? Okay, so let's look at our study guide. So we're looking at my study guide, right? Okay, so for chapter 7, as I mentioned in the video, it needs a lot of pencils and paper just to write write out all these problems and examples. Chapter 7 is cost, volume, profit analysis, and it's based on chapter 6 when we mentioned contribution approach income statement. So we do sales minus variable costs, and then we got contribution margin, and then we got fixed costs, and then operating income. So I just asked you how to do contribution margin ratio, and it was incredible. I'm glad that you know how to do that. And then I think if you are able to do that, you must have a good understanding of this CVP analysis. And what what stands out in chapter 7 compared to chapter 6 is how to do break-even points. Break-even point in units and break-even point in dollars, in sales dollars, and then also margin of safety in units and margin of safety in dollars, which you have done in project 2. I don't think I have to go over all these class material again, but I would prefer that we do some of the problems together. Okay. Chapter 7. Okay. So this is chapter 7. Can you look at question 2 and tell me the answer? You can do private chat as well. Mm-hmm. Mm-hmm. Yeah. Yeah. So in order to calculate your forecast total contribution margin, you can actually use contribution margin per unit times the total unit, or sales in unit. Okay. Actually, the unit's the same. Sales units, the unit we use to calculate variable cost, and the unit we use for contribution margin. Okay. So the answer is B. Okay, let's look at, let's do 4, okay? Let's do 4 together. I'll give you a few minutes to, maybe 1-2 minutes to figure out break-even sales, just to a little bit more practice on that, okay? Yep. Yep. Okay, let's work on this together. So my first question is, when does the firm break even? What does break even mean? Somebody test me. Yep. Okay, what does break even mean? Break even means operating income is 0, right? So that's what we want to figure out. All our contribution margin from the products that we sell can just cover our fixed cost. Okay, so that's our break even. We do not make money and we do not lose money. And then for the contribution approach income statement, what is contribution? I'm sorry, excuse me. What is operating income? Operating income equals to contribution margin minus fixed cost, right? And then if operating income is 0, that means contribution margin will be equal to our fixed cost, right? So we want our contribution margin to be equal to fixed cost. And what is our contribution margin? We don't know our contribution margin, but we know contribution margin per unit. What is contribution margin per unit? Is sales per unit minus variable cost per unit, right? So that is 17. And then we know our total contribution margin will be equal to contribution margin. Let me go to the next slide. Contribution margin will be equal to our contribution margin per unit times the unit, okay? So for 1 unit that we sell, we have a contribution margin of 17. And then how many units do we sell? We don't know. So there's an X, okay? And we want contribution margin to be equal to our fixed expenses, which is 56,950. Let's see. 56,950, okay? And now it comes to the function to solve X from this. So then X will be equal to 3,350, okay? So this is how we figure out break-even sales. Just remember, whatever you are doing, break-even is to let your contribution margin to be equal to fixed cost, okay? Now let's look at 5, okay? Just to play around the break-even function, okay? I'll give you 1 minute to do 5. You can test me if you have working out. Okay, you're probably still working on that, but I'm gonna work out this problem with it together. So break even, like we said before, if we want to break even, we want operating income to be 0. And if we want operating income to be 0, that means our contribution margin will be equal to our fixed cost, okay? And then contribution margin will also equal to sales minus variable cost. And we want this to be equal to our fixed cost, okay? So after we have these, we actually can plug in these numbers, okay? So what is sales? Break-even sales, it says it's 360,000, and then minus variable cost. What is variable cost? We don't know our variable cost, right? So variable cost equals to V times X, but let's see. So equals to V times X. We can just write it down here. That would be equal to fixed expenses, which is $90,000. Okay, tell me if you have already worked on here. Tell me if you have reached here. No. Okay. Okay. Good. Okay. So once you come to here, you see that the question is asking what is the variable expense per unit. And then we want to solve V. So this is our goal, to solve V. And in order to solve V, we still don't have X, the total number of units. Okay, so now do you know the total number of units, total number of sale units? We don't know total number of units, but we know sales in dollars is $360,000. And we also know that sales price is 64. So that means our sales in units, or X, it's actually 360,000 divided by 64. Okay, and that is using my phone. 5,625. Okay. So now you know that X is 5,625. And then, so instead of this number here, instead of X here, we can change X to our 5,625, okay? And then you can solve this function to get our V. Can you solve that for me? Anyone? You can text me the answer. Yes, correct. Mm-hmm. So the answer is the 48. Okay, it's D. Okay, I think that's pretty much what we can do today. And do you have any other specific questions, or if you have gone through the problems and you want me to help you with any problem here?
Could you just go up to that problem we just did? I want to take a photo of it so I can kind of look back at it. If you don't mind.
This one? Okay.
Yeah, thank you.
Mhm.
All good. Appreciate it.
You're welcome. It's okay. I'm gonna post this video as well, so you can check it later if you want.
For
Any
the
other
exam,
questions?
sorry.
Yeah, go ahead.
I was just gonna ask for the exam. Are we allowed to use pen and paper?
I think you're only allowed to use a Excel file.
Okay.
Mm-hmm. Well, that's why I said you can write, just read out the structure of contribution approach income statement, and then maybe the cost function in any way that you are familiar with. Actually, I'm going to show you some techniques to do that if you are available. I know we have spent a lot of time today, but yeah, I will not go through any more problems. And if you have anything else, you can leave now. And if you want to stay, I'll show you a little bit, about the techniques to do notes or like drafts on Excel. Okay. So if say it's the Excel, and you can say contribution approach income statement. And then you can write out, all the items here, sales minus the VC. Use the little prime so that Excel recognize that it is not a function. So then, and then equals contribution margin. Also use the little prime here. And then also you can do minus fixed cost, and then equals to operating income. Okay. So, and then you can just try a little bit, like play a little some numbers. This is too big. And then for CM, you can do a function, this minus this. Okay. And then for fixed cost, you may have some other numbers, for example, and then here you can do a CM minus this. And then you can also, do something else. Like you can say per unit, okay? And then you can, for example, you can also use like unit here, just to help you solve the problem. For example, per unit is say 24, okay? And then that unit is this divided by this, and then the unit will stay constant. So you can do a copy, paste a special values, okay? And then in this way, it will just count all these, just the numbers instead of the functions. Like, it's just an option for you if you want to do that, or this way is easier for you, okay? And then you can figure out all these, and then if say it's break even, and then you can see, this is 0, and then what can we do here to make it 0, okay? Just to something to figure out. And then also the cost function, y equals to y equals to v X, and F, just to write all these out and then try to figure out how to do if you have V or X and the F, and then how to calculate your Y, just something like that. It depends on the specific question. Okay. Any other questions?
I have one more. Sorry.
It's okay.
What's the main difference between absorption costing and like what is it called? Contribution.
Let me see. Let me pull out the study guide. It's just the name. So absorption costing is the same as functional income statement, where we say is traditional income statement, where we can see in the financial reports to SEC, for example, you use sales and minus product cost first, and then we got a gross margin, and then operating income, which is our period cost. If you remember, we did in chapter 2 to differentiate between product cost and period cost. And this period cost does not have anything to do with our production. And then we have operating income. So this is a functional, or we say traditional and absorbing costing, okay? And then for contribution approach, or we say variable costing, contribution costing, this income statement is more to be used internally by the management to analyze our costs, okay? Because fixed cost is not something that we can control in the short run, but variable cost is what we can predict from, the total number of units that we sell, and we want to know how. For example, the very easiest question to answer is how many products do we need to sell in order to not lose money, okay? So this is more like an internal use. Does it make sense?
Yes, thank you.
Okay, you're welcome. Any other questions? So if you you're available, you have time, I would recommend just try to work on these sample questions as much as possible, just to have an idea or just be familiar with all these functions. And there's also a practice exam on eCampus under bonus point or extra credit opportunities, but those problems will be more aligned with our exam question format. Our exam questions are not like, these practice questions, but these practice questions just to help you to practice. Okay.
So do you recommend me practicing with the bonus extra credit exams?
Yeah.
So do you think if I...
Yeah, you can also have bonus from that, so why not?
And do you think if I do really good on those and practice it a lot, I would do good?
Yeah.
In the exam?
Yeah.
Because that's more close to the exam, right? More similar to the exam.
Yeah, the formats are most close to the exam, but I don't think that would be enough, for the practice. If you, let me see. If you have a good understanding, at least to the class notes that I send, I think that would be good. If you don't have time to work on all these sample questions, I know there's a lot of questions, but at least you should be familiar with all the class examples that in the video. The class notes like this. Yeah. And there are some examples, but not too many examples, but some problems. Maybe you can just cover, in your version, there's no answers to that, but just work on these problems and then compare with with the answers in my video. And if there's any questions that I didn't go over in the video, you can contact me, and I can let you know the answers and check with me about all these problems.
Good. And
Yeah.
so I can also practice with the homeworks, right? Like the homeworks.
Yes, you do.
That's-
Yeah, you can.
And that would be helpful, right?
Yeah.
Okay. Okay. Thank you.
Yeah. So every resource are basically to help you understand the material. And if you have a good knowledge of the material, then you will be good in exams, no matter what format that will be. So yeah, try to work on problems as much as possible, especially for this module. This is a little bit tough. Any other questions? Okay, think we can wrap it up. And then thank you for coming, and I hope you have a good luck for with tomorrow's quiz and the exam next Monday. If you have any questions, I have my office hours still on Monday at 1:30. And if you have, it's better that if you are already almost ready and then have any specific questions, then we can work on that during my office hours. And I think that would be more helpful. And if you don't have any questions, we can close out the meeting.